Hey, hello. How are you? What a day. What a Friday. Happy Friday. For those who like the fact that it's Friday, thank goodness it's Friday, I guess. May there be some good to it for you. Lots of it. What am I here to talk about? As you folks know, I often talk about the Bitcoin. And in that capacity, today is no different. What I am going to say about it regarding the VEPs is quite simple. If you look at the daily time frame of the Bitcoin, you will notice that it is quickly approaching the that's a very interesting bottle of wine from Georgia, and I don't mean the American state. The Bitcoin daily time frame is rapidly approaching the 30 power mean, smoothing like 10. Now, why is that important? Well, right, positive returns beget positive returns, except when they don't, or until they don't. Just like negative returns beget negative returns until they don't. And what's been happening the last good number of days, we've been seeing an increasing amount of positive returns overall, right? Does it mean there have been no negative returns within those last few days to scalp lower time frames? No, of course not. But does it mean that we are generally headed with the returns in the positive direction? Yeah, absolutely it does. That is exactly what's happening, right? We're seeing positive returns after last week's little dip on last Friday. And if the returns continue to be positive, well, they may very well cross over and above the 30 power mean, maybe even today or sometime this weekend. Why does that matter? Well, again, positive returns beget positive returns until they don't. So if we're seeing the asset giving positive returns on the daily time frame and it's running above the power mean, and those power means are bullies, they call them that for a reason. That's a good sign for longs. Let's just put it that way. Now, can you have down days when the asset is above the power mean? Well, of course you can. Just like you can have up days when it's below the power mean, like in recent days. Right? The asset is still below that daily power mean. It's been moving up. And of course you can change the setting and look at a different length of the power mean. You can look at the 21, or you can look at the 18, or you can look at the 9, or you can look at the 33 or the 99. You'll see them all in different places. And if you look at the UPM power mean ribbon, you'll see many of them all at once. That's kind of the beauty of it. And you can see where the asset is regarding the power mean and the reverse wave trend. And you'll notice what the asset does when it pulls away significantly from the power mean. Eventually it will mean revert towards the power means, because they are means. They're all logarithmic means of return, right? That's what we're looking at. We're not looking at simple moving averages or exponential moving averages of price. We don't care about that stuff at Alpha Trading. We care about the means regarding the returns, right? The mean of returns is how you calculate the value of things that matter when you're trading. So is it generally good to see the asset moving above the logarithmic power means? Yes, it is if you're looking for the asset to go up. Is it generally good for it to go below the power mean? Yes, it is if you're looking for it to go down. Is it not possible to front run so that you can catch the moment that it starts turning around? Yeah, it is. Look at lower time frames. Right? Is it impossible to catch the exact moment? No, it's not impossible. You might be that exact moment trade. but it's not easy. So I wouldn't worry about catching the exact moment. That's not a way to manage your risk wisely, usually. If you're trying to sit there and be like, oh, I missed the exact moment. No, catch the trade where your targets are. Don't just chase someone else's dragon. That's not going to do you any good, right? You want to be able to set your targets ahead of time, get your aim on them ahead of time, and set your entries ahead of time, especially if you're doing what you should do, which is running limit orders. All right. So, for example, if you're trading the daily time frame, which is a very high time frame, I don't recommend trading such high time frames, because if you're doing that, you're basically a short-term investor, because you might only get a move every month or two, depending on the asset. But in Bitcoin land, it's possible to get more. So even every couple weeks, so you're a very short-term investor. You're more like a loan shark at that point, or a payday loan shark or something. But let's say, for example, on the daily time frame, right, and you know that the asset is going to close, and maybe it's going to close today above that power mean. Now, if you want to be conservative, what you would do is you would actually wait for an entire candle to open and close. In other words, another day on the daily time frame to open and close above the power mean. Clean, right? And preferably in the upward direction. That would be a conservative place, at which point you could say, all right, time to go up. But you'll notice that Bitcoin's a very volatile asset, that you might miss the move or a significant chunk of it by doing that, because it could very well shoot very high above that power mean on that first day after it pops up above it, or even on the day that it pops up above it. Like it might go very high above it today. You don't want to miss that move. Well, how do you not miss the move? You look at a lower time frame. Now, if you want to trade that daily time frame, and you want to front run it a little, you could, in theory, say, all right, it had a very nice strong finish today, closed above the power mean. I'm taking the long tomorrow, even though it's a weekend, whatever. It probably have a nice day on Saturday, and you look at the probabilities you get on Sunday, and then, okay, it looks like it's going to go down a little on Sunday, so I'll just take my profits, and then just wait for the Monday to start again. Okay, that's one way you could do that. There's a slight increase in risk in doing that, just because of the probabilities that usually say it's less risky to take the trade after it's confirmed a full candle above the power mean. But again, it really depends on the way you trade, right? And it depends on which power mean you're using, right? Like if you use the 30, it's kind of a standard one to use because there's 30 days on average in a month. So a lot of bots at the high frequency trading firms use that number as a length for the mean. Do they also use other lengths like the 33 or the 18 or the 99? Absolutely they do. Do they run their trades on a daily time frame? No. They run their trades in millionths of a second or 0.2 seconds, for the average trade length. But they're running millions of trades per second, averaging about 0.2 seconds each. Right? So every second, they got millions of trades done in an average of 0.2 seconds per trade. They just run a lot of orders at the same time because, well, they're high-powered, high-frequency trading computers, right? Managed by professionals who basically make sure the systems are running. And the individuals don't enter the orders exactly, right, the way that you do when you order a trade on your exchange. Individuals simply run the systems and make sure that the systems are running okay. And they have general targets, right, that they're put in for buys and sells. And they let the system use the rules that they choose. Right? They can tell the system to choose the rules more than them, or they can tell the system, no, I'm going to tell you more of the rules. So the system is basically using machine learning, right? Not artificial intelligence, really, but machine learning. And you could say, well, increasingly it's using AI. Yeah, in some cases, but mostly these trading bots are basically machine learning bots. They're not that super advanced. And they don't need to be. They're just following rules that are mathematically based. So all they got to do is see when an asset is doing a certain thing. Is it following according to these rules or those rules? And then they know which trade to run, whether to buy or to sell or hold, right? Well, when you're running millions of trades per second and your average trade is 0.2 seconds, you're not holding very long, right? Oh no, maybe they're gonna hold this trade for an entire second. And again, you might think, well, that's crazy. What could you possibly get in a second? I look at the 1 minute chart and the asset doesn't move in a second. Well, it does actually move in a second when there's millions of orders going through the system every second, right? And if you look at the much lower than 1 second timer, if you look at like the real time, 0.0001 second clock or time frame, you'll see that the asset is zipping up and down, up and down, up and down. And yes, it's tiny percentages, but we're talking about computers that are running positions that are very significant in size. So they don't need it to move a significant amount in order to take profits, right? If they have 100 Bitcoin or 1,000 Bitcoin on the line, even a move of $1, which is nothing in Bitcoin, is going to give them $1,000 profit on that trade. And you can think, well, who's going to put 1,000 Bitcoin on the line? Okay, high frequency trading firms that know what they're doing, right? Big whale traders who have these systems and know what they're doing. That's who. Okay, they could do it with 100 Bitcoin. They could do it with 10 Bitcoin. And if you're making $10 every second, and you're doing God knows however many more orders, sorry, $10 every 0.2 seconds, that's $50 a second. That's very profitable, right? As long as your bot is winning most of the trades. So, is it possible that these bots are running such massive amounts of trades? Yes, because that's what they do, literally. Is it possible that these massive amounts of trades are actually running the markets? Yes, because that's what they're literally doing. So how are they, what maths are they using? Again, they're using the same VEPs that we use at Alpha Trading. So I'm not going to dwell on it. I'm just going to tell you, if you want to learn, go to alphatradinghq.com/Discord and get your free access to the Volatility Starter Pack of trading indicators. And you can learn to trade the VEPs. And we'll see you in the live stream, which runs Monday through Friday, starting at 9 a.m. U.S. Eastern Time. All right. See you guys. Happy trading.